Buenos dias. Hello, people.
Hey, Nick.
What's going on, Byron? First of all, real quick, I want to introduce Byron. For many of you, this is not your first time. I know a lot of people, a lot of our listeners and subs and friends and all and countrymen subscribe to your newsletter. And I only open the email if it's one of yours. There is one other guy, I think Mike. His stuff is pretty good too. I can't pronounce his last name. There's a lot of double consonants and things like
Mike
that.
Ippolito, co-founder of Blockworks, and the guy I report to. So I think his newsletters are great.
His stuff is awesome. Best stuff I've ever read. It's like reading from the baby Jesus' own. But I like his stuff, but I like your stuff in a different way. Not that one's better or less better, but yours is better. So I like your perspective, and I like the way you have a lot of really cool anecdotal and kind of historical reference for some of the things that you say. And I think a lot of your ideas they're great surface ideas, and there's also some very abstract, cool thought in there. And if people read the articles, I tend to read them, and then about 30 or 45 minutes later, I'm like, yeah, okay, I get it. So tell me, how did you guys kind of come together? How did you get discovered by those guys?
Yeah, it's a pretty pedestrian story, to be honest. I need to make up a better story. There should be a good origin story. All right, next time I'm going to have a totally fabricated.
Every superhero has an origin story, Byron. Come on, man.
But right now I've only got the real story, which is kind of boring, which is that I responded to a LinkedIn ad. I was trading equities for like 20 years, and trading equities these days is not nearly as fun as it used to be. In the 90s, trading equities was super fun. In the aughts, it was pretty fun, and now it's not fun at all anymore. I was a history major in college, so that's where all my weird anecdotes and stuff come from. And I always sort of self-identified as a writer, even though I had never really written anything. So I was looking around for something that would be more fun to do, since equities trading is not so fun anymore. And I just happened across this LinkedIn ad and responded to it. And they gave me a shot at it because they thought I would be able to translate crypto for more traditional finance people, or people who are just getting into it, and then maybe also translate it back the other way. Translate traditional finance for crypto natives. So that's what I try to do.
How do people find you? What's the easiest way? I mean, I subscribe to Blockworks, so I get their newsletter, which I think is 6 or 7 days a week, right?
It's every day. Cool. I only write weekdays, but we do send something on weekends also.
It's really good, and even on the days that aren't as fun, when you don't have a column, they do provide a bunch of links to some really good stories. Now, quick hashtag, and this probably is directed at Mike. That Blockworks is extremely Solana, pro Solana. We'll just say that. And it seems, but maybe I'm just, like when you're looking for a dentist, on every corner there's a dentist. But that's okay.
I can assure you that there's no direction. Like that's not on purpose. Everyone is encouraged to, follow the things they're interested in and go down the rabbit holes that they want to go down. So,
I will say,
if that's the case, it's not, it's
even the stuff that I don't personally agree with. It's not that it's great writing. Even the other writers and stuff and the other articles, it's all good writing. So it's one of the very, very few news sources in crypto, because the other ones are not as good. We'll just say that. The other ones are not as good. Okay, let me say hello to everyone. And before we get into the juice of it, I want to say hi to Biotech Breakout Unsung, John P1, Gordon Bennett, Tum for Tumfree. I always try to, phonetically see if there's some cleverness in the name. Sometimes it's just not that. Okay, let me say hello over here. We got Nesh, Jimmy James, Jungle. What's up, man? Jungle and I are gonna get together for a show. We've been trying. We're gonna do it. Let me say, if Jerry's out there, let me say hello to Jerry. Tim, what's going on? Krabby. I've loved your seafood for years. Breakfast Leadership, Debbie, what's up? Michael, Phil, Phil tends to be driving at this time of day. Don't drive into oncoming traffic, Phil. That is counterproductive. Jimmy James, what's going on? Oh, cool. I got some Byron fans in the house. What up? What up? Let's see. If I read through that one, I may commit a hate crime. Nico, what's going on? Belinda, Suze, Dubai. What up? 901 Onion. I don't know why. That sounds important. I feel like that's going to solve some key. That's like some linchpin of society. Okay. Be inspired. Very well. Well done. Joe Fernandez, ¿Qué onda? Ella Paul. Curtis, what's up? And Demayan. Okay, cool. So without further ado, why don't we roll our little opening and then we will get to it. We got some cool articles. Markets are doing good. People tend to be more jubilant, more smiles when the market is up, but you know, you're not buying when the markets are going. In my opinion, you make your money when it's red, and you kind of then you stress like you're at the top of a swing set when it's green. Like, when will it be red again? So anyway, we will be right back and we will get it all started. Okay, before we jump and just take a quick look at markets, Byron, was there, last week, really the last couple of weeks have been this little bitty pool of green in about 5 months of slow, kind of relatively painful grinding down, which I thought was incredibly healthy. It's tough to say that when markets are going down and you see your net worth deteriorating, but I think those are healthy moments. And what do you look at like the last 5 months, and then what do you look at like the last couple of weeks? How do you kind of frame that?
The last couple of weeks, I don't think you can draw any big conclusions so far because, equities have also rallied. So it might just be that crypto is still correlated to risk assets and equities in particular, in which case the bounce is not very interesting. We want it to be a secular bounce. We want it to be crypto specific, and I don't think there's enough evidence for that in the last couple of weeks. Last 5 months, it's been kind of, well, put it this way. If I look at my crypto portfolio, it feels very much like a bear market because my crypto portfolio kind of stinks. But then if you look at all the headlines about the VC investments and some of the things like ApeCoin and the valuations that things get, it seems very bull market. So I'm not even sure, are we in a bear market or a bull market? I couldn't even tell you. My takeaway from that, which is just preliminary because 5 months is also, not that long of a time. My takeaway is a little bit what you were saying about the top of the swing, bottom of the swing. Like, I think you need to be a trader in crypto. I don't think hodling works at the moment, certainly. I think you have to be more tactical. And that took me a little bit of time to figure out, because in equities, I'm definitely a momentum guy. I actually prefer to buy at the highs because, when equities make highs, they tend to make more highs. So I never try to pick bottoms in equities. I always just kind of go with the trend. And I think doesn't really work in crypto. I think crypto is too mean reverting. It kind of trades more like commodities or something like that. So yeah, that's my framework for the last, say, 5 months.
You think that there's this sense in crypto that everyone's trying to, instead of, like, for instance, I know that your position lately has been that value investing is going to be very difficult, if not impossible, in the crypto space because of some certain kind of reward functions that are inherent in the crypto space. I tend to look at it. So I am of similar opinion, although I think there are some stalwart assets, some infrastructure assets that you can be a value investor in. Some of these protocol layers, I think if you own the protocol layers, you probably own the future of Web3. And I know we don't know what Web3 is because a lot of that has become murky as of late with the whole metaverse stamp that you put on.
That's the subject of today's column. Very topical.
Yep, and it tends. Oh, I didn't even know that. So I'll look forward to that. But I see your position. I think where I differ is I think if you own the infrastructure, you can take a kind of early American investor point of view. As things went west and we started to build roadways and highways and things like that. So I think as a Web3 play, there's a lot of locked up potential value. I think AI, there's a lot of locked up potential value. That's even trickier because, well, in a sense, less tricky in that there's less options, but more tricky in that who on earth knows what AI is going to look like? We can't imagine it because we can't imagine what we can't imagine. We're not the robots. But on the other side, then there's the other 11,964 assets that sometimes do nothing and sometimes do 100x in 4 months. And that's where I think a trader's mentality in a certain amount, portion of your portfolio does make a lot of sense. Where I reduce that is I tend to trade Bitcoin. I'm a net option seller. So I'll sell cash secured puts and covered calls against Bitcoin in about a third of my portfolio, and then for my clients as well. And that's essentially how I trade the trends and the enthusiasm in the crypto space, because I just don't know if anyone can pick winners in this market. It's very difficult. What are your thoughts when you look at your assets and you say, okay, are there assets you will trade and assets you bank? Are there kind of golden assets in your portfolio that you're not willing to trade? And then, or is everything up for grabs?
Everything is up for grabs, which is different than the way I approach equities. Equities, I'm much more buy and hold. Crypto, I am definitely, everything's up for grabs. As far as I agree that like infrastructure is maybe the thing that you want to buy and hold, but infrastructure is hard. Like, railroads were lousy investments. Telcos in the 2000s were lousy investments. They turned out to be extremely useful for the world, but they were lousy for investors. And I kind of think crypto might do the same. Like, I think that the stuff that is being built now is amazing and is going to be super useful, but I'm not sure that it's going to be great for investors.
What do you think, Byron? Because this is something I haven't seen you touch upon, but I'm starting to see an ecosystem effect take shape in crypto where you own an asset. They either through vertical launches, like for instance, SingularityNet is launching companies underneath SingularityNet. And if you own SingularityNet, you get a percentage of an allocation of their vertical companies. If you own Fetch, they launch companies underneath Fetch, you get tokens for those companies. So they're kind of taking their early investors and seeding them with a percentage of the, let's call it crypto equity, right? There's not really direct equity, but for the sake of this conversation, equity in those new ventures. You have it in all of the protocols. You have Cardano, and they're seeding with coins. God, there's like 30 projects that you can get now. If you stake Cardano every week, tons of coins just appear. You literally just choose the ones you want to download to your wallet. And so this is happening more and more. It's happening in Cosmos. Algorand has even mentioned something like this. Of course, Ethereum, there have been spinoffs and forks and all this kind of stuff, but you're starting to see these protocols spin up dApps and like the swap platforms and all this, and some other kind of less intuitive dApps, and then you kind of own a piece of it. So is this kind of a way where infrastructure may pay because you were in the infrastructure and then you were in one of these ancillary assets that bloomed out of that? So this kind of infrastructure blossoming, I don't know what we would call that effect. You can probably name it better than me, but are you starting to kind of notice this trend as well?
Yeah, to me, that's what crypto is all about. I feel like a lot of commentary, especially when people are talking about Web3, the commentary kind of suggests that like all the stuff that's happening now is just crazy speculation, and just wait until we start doing real stuff like buying and selling houses on chain or something like that. But I don't really see it that way. Like, I think for crypto, the tokens are the product and the networks are the product. And, the defining characteristic of crypto to me is ownership and innovating different ways of owning things. So what you're talking about, I think, is what crypto is all about. And that's where crypto is creating value.
So when you're looking at the space, In your portfolio, are there, so I know that you're willing to trade just about anything, trend trade. Is there anything where you feel like you've got an angle on it? You're seeing something, you don't have to give anything specific away if it's some industry secret, but do you see something you think traders are not seeing and that's giving you a trader's advantage?
No, I would say, like, for me, mostly what I'm doing is trading tokens to learn about them, really. Like this weekend, I bought the Rune token, the token for Thorchain, which a colleague told me about a couple of months ago, and I passed on buying it at $5, and then this weekend I decided to buy it at $10. So that is not good trading, but I like in actually like pressing the buttons and opening the wallets I needed to open it and watching it move around. Then I actually understood. Like, okay, now I get Thorchain. Like, I understand what it's all about, and I could see how it could be really big. So for me, trading crypto it has not been real profitable so far. I've had more stinkers and I've had good ones. So for me, it's just mostly a learning process right now.
Okay, when you look at your portfolio, and if you were to break it down into chunks, how do you break down your portfolio? Or do you just go, this is cool, I want some of it. This is cool, I want some of it.
Yeah, the latter. Like my original intention was to keep a core holding of Bitcoin and Ether, and then trade some altcoins around it, or buy some altcoins that I thought were lottery tickets or something. But I just keep on finding fun things and I want to try, and then I spend my Bitcoin and Ether on it, and now I'm like down to like nothing in Bitcoin and Ether because I've spent it all on these altcoins, which has not gone great so far. But one hopes springs eternal, and two, like I said, I've really that is my way to learn crypto, basically.
If you were to bring someone into the space right now, and first of all, can you real quick talk a little bit about your trading experience? It's not like you just traded for 3 years on E-Trade and you've come to this space. You've got some skins from the equity market, and you also started. I was reading one of your stories. It was a couple weeks ago where they were doing a dog and pony show, and you were there, and you like one of your kind of the head traders, like, okay, say the right things and do the right things. Can you tell us a little bit about the kind of your early ingratiation into trading and what that was like?
Yeah, I started trading right out of college, which was a long time ago. My first job out of college was with a floor broker on the Frankfurt Stock Exchange in Germany. I'm not German, but I took some German in college, and a friend of a friend got me the job. And I just got tossed in the deep end. I was, trading risk from like my second week on the job or something. I spent about 20 years trading equities for either brokers or banks. I spent 10 years at Citigroup, mostly in London, trading European equities. Most of it was as a market maker, so like making prices for our big customers and stuff. A few years of it was just strictly on a prop desk, so just trading the things in the ways that I thought they were going to go. Mostly my value add, to the degree I have it, is that I've been around a long time and seen all kinds of different markets, and I can kind of make connections between what's happening now and what happened then and stuff like that.
Okay, this will be interesting. What was your worst day trading? There's always, everybody remembers a worst day and a best day. Do you remember?
I remember the bad ones much more than the good ones. I had probably 3 or 4 days where that I booked like 6-digit losses, and they were really hard. Like, they still, like, if I think about them now, I still break out into a cold sweat, even though I worked at a really big bank where losing $1 million was like a rounding error for the bank. That's not, psychologically, there's something about it where even though it's not your money, it still kind of feels like it's your money.
Do you walk through the hall on that day and like avert eye contact because you think like, oh, there's Joe, he's a VP, he knows what I've done?
No, there was also a little bit of that came with the territory. But yeah, it did not feel very good. And when I think about it, I still break out in a cold sweat.
Were these mistakes that you made, for instance, Was it a piece of information you didn't factor, or was the whole market getting crushed and you were one of the many melted faces?
There was both. There was a couple of days in 2008 where it was just, everyone was getting crushed. Those are a little easier because everyone around you was also getting crushed. And there was also a couple of them where I just did something stupid, and I was like, and afterwards, like, I cannot believe I just did that. I think my worst one was there were rumors of Nestle buying another French consumer food company, and for some reason I was sure that was not going to happen, and I sold the stock right before, like 10 minutes before the close, and the merger announcement was like 1 minute after the close. Like, it was like 11 minutes. I managed to lose $1 million in like 11 minutes. And that just
well, it was lost potential profit. It wasn't a booked loss though, right?
No, it was a booked loss. I shorted the stock that
I
was sure was not going to get bought. And to add in, I remember it still, the thing that pushed me over the edge was a hedge fund guy called from his boat and put the trade on, and I thought, this guy calling in from his boat, there's no way he knows what's going on. This is
who does he think he is? Yeah.
I sold him the stock, and then 11 minutes later, he was paying for his boat, and I was in the fetal position under my desk. It wasn't very nice.
When those kinds of things happen, does somebody come down and talk to you? For instance, do you guys do an after action on like a big trade and go, okay, where did this go wrong? What, because you want it to be a teachable moment. I mean, on a personal level, obviously it is. Because I've done those. I've had a bunch of those where I start trying to weigh the information and say, like, how did I get this wrong? And just don't feel bad. I've had personal 7-figure days, both ways, but I don't remember the up ways. I used to measure them in terms of sports cars because my buddy and I have a sports car rental company. So we rent exotics and stuff, right? So I used to measure my days and how many Euruses I got or lost. And I've had I had 1 4 Eurus day, a loss. And you go, well, like, if I go back and I hit the reset switch with the information I had, would I have made a different decision? So when you do that, do you do that kind of thing and look at those, try to make teachable moments out of those hits?
Yeah, you try not to make the same mistake twice. But yeah, I don't know. On a big trading floor, I think, if you have a good manager, he or she knows to not to give you too much of a hard time on a really bad day, because they know you already feel terrible about it.
So it's kind of like they reinforce this idea of quarterback amnesia. Like, just get out there and keep throwing. They won't all be intercepted. Unless you play for the Cowboys, in which case they will all be.
Yeah, I'm not sure about that. There was definitely an undertone of "don't do that again." So it depends on the situation.
Is it in the environment you were in? Is shorting, for instance, it's a normal function in markets. It creates a certain kind of liquidity, and it's important. I know that right now, especially last year, it was villainized. Oh, the evil of shorting. How dare they? And I think it was lost in this kind of everybody, the woke AF society of like, we'll show them from the Reddit mafia all the way on out. Even though the whole GameStop thing was like very ridiculous because it's still a terrible company. And most of these companies that Joe Sixpack got behind are terrible companies. But and I think terrible companies are supposed to die. And I think shorting in many cases does a lot of good things. However, on the balance sheet side, you can take heavy losses real quick because, sometimes whimsy can catch these things and they can go nuts in the wrong direction. There's no ceiling on the kind of losses you can take in a short position for the most part. So is shorting, how much of a part of your trading transaction was short versus was it kind of like 5% of your trades were short trades, or like how often did you have enough conviction to go short on various assets?
I mean, when I was trading professionally, it was like, I don't know, probably 40% or something of the trades were shorts, but that was mostly because you wanted to have a balanced book. You didn't want to be, you didn't want to have too much beta. You didn't want to just be long and hope the market was going to be up. You were trying to create alpha, which requires shorting. for my personal book, I rarely short, just because it's so much harder. Like making money shorting is like 10 times harder than making money being long of something in equities. But one of the things I'm learning in crypto is that you probably do have to short things occasionally, because it's just, crypto does not seem to have the upward trending bias that equities have. So I don't think I've shorted a crypto as of yet. No, I've not shorted any crypto as of yet, but I need to start doing that. It's hard though, because it's the best way to do it was with perps, and if you're US based, you're not allowed to trade perps. So it's if you're US based, it's hard to short crypto, but I need to figure that out, because it is to me a mean reverting asset class, and if you're going to trade a mean reverting asset class, you need to be able to short.
Do you think the poor man's short, like, just putting on put positions and things like that? Do you think that's a way for people to start to express kind of short interest in assets?
I mean, there's not much of a options market available, certainly to U.S. traders in crypto. You can with FTX, but that market is like super illiquid and very wide bids and offers, and I think it's just Bitcoin and Ether. There's more of a market for non-US people, but it's still not amazing. Perps are definitely better than options, I think. Can
you explain perps a little bit to people that may not be familiar? That's because that's kind of a non-crypto, it's a more traditional term.
Yeah, so perps are perpetual futures, so they're futures contracts that do not expire, and they trade at a premium or discount according to supply and demand. So if it's an instrument, if the perp is on an underlying that everybody wants to short, then there will be then the shorts will pay longs a funding rate. And if it's an instrument that everyone wants to be long of, then the longs will pay shorts a funding rate. So it's effectively the exact same. Like if you're shorting something, it's the exact same of borrowing a stock, paying to borrow it, and then selling it in the market.
And I think if I'm not mistaken, every 8 hours, essentially that funding rate is implied on an account, and so the more leverage you have, the more drastic that can become. And that may, in many cases, contribute to some of these big cascading unwinds that we tend to see in Bitcoin, well, in both directions, but it tends to be in the negative direction first. Bitcoin will run for a while. People get incredibly enthusiastic, irrationally so. And then when it begins to unwind, because of that, 3 times a day implied funding rate, what I actually watch the funding rate in Bitcoin. And when I see it over 10 basis points, I start getting a little bit uncomfortable. And if I see it over 15, I'm out. Like I'm either selling puts or I'm, cash secured puts right then. I'm selling at the money calls to protect a little bit of at least what I've got. How do you think those funding rates contribute to kind of cascading liquidations and things like that?
Yeah, I mean, they're a direct indication of sentiment, and a lot, I don't know what percentage, but a lot of the perp traders are trading on leverage. So yeah, I think you're looking at it exactly the right way.
Leverage is an interesting one too. Do you use any leverage at all in crypto?
No, crypto is so volatile. There's absolutely no reason to use leverage.
Do you use now? How actively are you still trading traditional markets?
Not super actively. I've never been much of a trader for my personal account. It was mostly like buying and holding for like at least a couple of months. So I don't know if that counts as a trade or not. Depends on your perspective. So yeah, I would trade things with a 3 or 4 month view, but I don't bother to like intraday trade or trade on a week or something, except for I guess in the COVID crash, then it got kind of fun and interesting to mess around with leveraged ETFs and things like that on a sort of intraday basis. But generally it's, buy and hold for at least 3 or 4 months.
So in your personal accounts, you are more of a value-ish investor.
Yeah.
Okay. Now in the crypto space, do you find that the interval between trades is much tinier because of that volatility?
No, but that's a good question. Mostly I've been trying to mostly buy lottery tickets in crypto, which has not worked out. Like when I started, I've only been really full-time in crypto since September, so 6 months or something. And when I started it, I thought that the objective was to, buy 25 things and hope that 2 of them were Solana or something. But now I don't think that's not the right approach. I don't think there's going to be many more Solanas. I think that was, I think that era of things going up 100 and 1,000 times is probably behind us. So I've been buying and selling on maybe like a 1 or 2 month view. But I should probably shorten that, except that it's just very time consuming. Like I don't really have that much time to be like, I can't watch crypto prices all day long. It's like, it's very, it's very high maintenance and hard work, really.
Where do you get your ideas from? So in the cryptos, because there's 12,000 plus assets and like 70 more each second, it seems like, and that's if we don't count the non-fungible degenerate space. Where do you get your investment ideas from?
I mostly get them from my colleagues, which is partly a function of, because that's how I did it at a bank. Like, as a trader at a bank, you are mostly trading the ideas that come from your research department or from brokers or something else. As a trader, you're not building models and trying to come up with original theses on something. You're looking at other people's ideas and then trying to pick out the ones that are going to be price relevant, or try to time the move that something's going to have on somebody's idea or something like that. So I do, I do the same in crypto. I listen to my colleagues, and when something sounds price relevant and interesting to me, then I give it a try.
Okay, I have to ask you this, and I'm already clutching my pearls, but I have to ask, what the F is going on with ApeCoin?
Yeah. I haven't looked at ApeCoin the last couple of days.
But I mean, just in general, the idea, I mean, look at the currency, just look at the money these guys hoovered up in venture capital. Are VCs really just firing a shotgun in every direction at this point?
It does seem that way. I'm not like in the VC community, but anecdotally, it seems like it's very easy to get your projects funded at the moment, and it's very easy to get a high valuation on them. And also VCs seem to be doing, very, very well. To me, if VC is where is the place to be in crypto at the moment, because you can, if you're well connected, then you can get into the seed round fundraising, and then 3 months later you can sell the governance tokens to the retail buyers, and you probably make the same kind of return in 3 months that it took you 5 years to make in equities. So I think the VC is the sweet spot for crypto investing, and I think they are having a very good time at the moment.
But that's, we can all, I think we agree that's a members only club. And it basically, what I see of VCs is buy early, promote through media, promote through a compliant group of media, and basically dump on the public. And your time horizon is just as quick as you can possibly flip to market.
Yeah, there's definitely some of that, but I think they're, VCs are also performing a service, which is that they are funneling a huge amount of cash into the crypto space that is going towards developing things. A lot of it is going to be ApeCoin type stuff that doesn't have any real societal value, but a lot of it is also going to be like, building the telco infrastructure in the year 2000. Those venture capitalists who funded that stuff, they did not make a return on that, and we all get to still use the fiber optic cables and stuff that they funded. And now, if you look at something like, like the Near network, the Near blockchain, I think seemed like really cool tech, and that was totally funded by VCs. I don't get the impression that they've been like, dumping on the public. Maybe they have. I don't know.
No,
but there's
that's
really
one of my favorite projects actually is Near. Yeah.
So there's like, VC money is funding some really cool stuff. But yeah, there are also things that are more closer to the pump and dump end of the spectrum as well.
So let's do this. Let's take a look at markets, and I want to do this because it's kind of interesting. If there's anything that you think is super interesting, and just real quickly, we're just having a net up day, and this is, I believe, more of a continued sigh of relief than it is any kind of indication of bullishness or bearishness. My personal belief is there aren't bull and bear markets in crypto because it's not even a fully formed market yet. These are just kind of perturbations and these up and down vacillations of a market trying to become an actual market. So I still think we're way too early and way too illiquid. Illiquid assets on illiquid exchanges being traded mostly by mediocre IQ investors. So until more currency units get into this space, I think it's going to be weird like this. And I tend to agree with you more. I think this is more of an overall sigh that came with, I don't know if it's Putin being more priced in, less of a World War III risk than maybe there was 3 weeks ago. A little bit of the kind of the silliness of the Fed being priced in that I think most people look at it and go, okay, well, the Fed clearly is going to raise rates as fast as they can to take credit for the easing of CPIs, which will naturally occur anyway as these kind of supply and logistic dislocations ameliorate themselves and we get back to this. Do you see this kind of do you think there's anything else in this recent run in Bitcoin and some of the other assets other than a kind of a sigh of relief?
No, I think you've identified the factors. I mean, one is the invasion of the Ukraine. I think the good news in quotation marks is that it seems like that's going to be contained to within the borders of the Ukraine, which is no consolation if you're in the Ukraine. But as far as risk assets go, the real risk was that it expanded beyond that, and that seems to not be the case. So that makes sense that risk assets got to bounce off of that. And then just I think people have had enough time to get their heads around the Fed raising rates. The Fed has been, Powell's been very careful about preparing everybody for what he's going to do and not springing any surprises on anybody. So I think the risk assets have gotten more comfortable with the idea of higher rates. I think where it gets interesting though is with quant tightening, because everyone always talks about the Powell put or the Fed put, but it seems like this time around with quant tightening, we've got a Fed call or Powell call. So to the degree the Fed really wants to get interest rates higher and its balance sheet lower, and to the degree that markets bounce or to the degree that they don't go down, that just gives the Fed leeway to do more of that. So whenever the market is up, I think you're going to see slightly more aggressive rate rises and more aggressive quant tightening, and that I would think should put a cap on risk assets in the short term. I think the portfolio effect is the biggest thing that the Fed has, because there's still a lot of people that essentially behave as if the Fed prints real money. And so at a certain point, it doesn't matter that they don't print real money. It doesn't matter that bank reserves aren't money. It matters that a bunch of people believe the Fed's printing money. And so I guess to roll that back, when we see these up markets, especially in equities, forget crypto for a second, it almost gives the Fed a little bit more runway to raise as fast as they can, so that later they can cut when they need to. Now, I think people also, well, most people probably don't, but I think a lot of people know that there is a line in the sand at which point you can no longer raise rates because no one can service their debt. And so there's this kind of line that they can get up to, and who knows what that line is. Some say 3.5, some say 3 flat, that
that once you pass that, no one can service their debt because companies that probably shouldn't exist have been borrowing money at near zero for over a decade. And this has created a kind of an economy where many of these companies, they're going to have a really hard time over 1.5%. They're completely obliterated over 3% because debt service becomes untenable. Do you see something like that brewing where the Fed could have to like cut just to kind of save the lives of some of these maybe companies that are kind of zombies?
I don't get that sense. I don't feel like the U.S. is full of zombie companies like Japan. That was the story in Japan for a long time. That there were a lot of companies that were just that shouldn't exist. I don't get that sense in the U.S. I mean, corporate credit spreads, last I looked at them, had not moved a whole lot, which makes sense to me because especially with inflation at 7 or 8% and the economy really good and savings high and unemployment low, it's going to be very easy for companies to service their debt. I don't think that's. I don't think they're being propped up by the Fed. It's just that this is an economy where it's just very easy to service your debt.
Do you think this is an overall good economy, or do you think this is just better than the worst ever, which was 2 years ago?
That's a good question. That is a weirdly hard question to answer. I think one thing that's easy to answer is that the European economy stinks and that the Chinese economy stinks. And so even if you think that the US is really good, the rest of the world is going to be a major drag. So I personally can't get too worried about the economy overheating, because I think it's very difficult to overheat in a world where you've got Europe and China both struggling. So I think I think the real risk is not deflation but disinflation and a weaker economy, but that's 2 or 3 quarters out. I would say that the economy right now is very good, but the risks are very much the downside.
So when you a lot of people hear inflation, reflation, disinflation, deflation, and they kind of go, what the smoke? And so the way I would explain disinflation is a slowing of the pace of inflation, which many use to track the success or the expansion of a local economy or a system of economies, and look at like growth and inflation expectations as a measure of that. So how would you kind of, to the layperson, explain disinflation?
Disinflation is just the rate of inflation. So it's a second derivative of inflation. So the last CPI was 7.9%, and I'm sure the next 2 or 3 months will be equally as bad. But my assumption is that towards the end of the year, we'll start getting 6% prints, 5% prints, 4% prints. So that's still inflation. 4% is still 4% higher than last year, but it's a lower rate. So that would be disinflation. And I think that's all. That's all that risk assets need. They just need. They don't need it to. You don't need it to go to -8%. That would be a catastrophe. Risk assets just want slower inflation.
When you back out energy, what is actually happening in the CPI in your opinion?
I think it's mostly housing, and I think it's housing and durable goods. I haven't looked at it that closely.
I mean, just your kind of gut feeling, Byron. Like because energy, there's some weird dislocations in energy that there's a variety of reasons, most of which don't have to do with an expanding, frothy, cash-filled, very liquid economy. So if you back out energy, which are the biggest kind of inputs in the rest of in the bucket, what do you see going on there for Joe Sixpack, for the American household?
As you said, I don't worry much about energy, the energy component, because that is mean reverting, and higher prices is the cure for higher prices. The thing that I think is concerning and will be sticking is the housing component, largely because that's a trailing indicator. So it's going to be like I think it's going to be many, many months before the housing component of CPI cools down. I don't think it's like that much of a problem for actual people. Like, I think the housing market will cool off before the actual statistics do. But it's a problem for the Fed because they very much worry about their credibility and the public perception of what they're doing. And as long as the headline CPI data is still 7+%, they're going to feel like they have to raise, which might put them in the situation of raising into a weak economy, raising because they have to, when really what they should be doing is cutting. And that's probably the worst case scenario for risk assets.
So let me ask you this. So let's say they raise as quick as, well, let me reduce it. Do you think they get 6 more hikes out of this? Are we going to see the 7? Me personally, I don't think we get anywhere near it. I think we get 3 or 4 and we're done. But what do you think? Do you think we get 6 more bumps of a quarter?
There's no reason to listen to me on Fed rate hike expectations, but my general framework is that the Fed will have to stop raising sooner than people think they will do. And if they don't, it'll be a policy error. They might not. They might just carry on for reasons of protecting their inflation fighting credibility or rebuilding it. But if they do, I think that'll be a policy mistake, and that would create more of a recession than we otherwise would have.
How many more bumps could they do before they blow up the housing starts? I don't really
think I don't think there's a causal relationship there. I think it's correlated, but it's not causal. I don't think the difference between 0% rates and 3% rates is I don't know. Does it have that big of an effect on the economy? I think what will happen is that by the time they get 6 or 7 rate hikes in, then the economy will have done what it was going to do anyway, which is turn lower, and then they will start cutting again. And it might work out that it looks like the rate hikes were causal, which is probably exactly what they want, because the Fed's ability to affect inflation and growth and stuff is largely signaling, and their effect on financial markets. So to the degree that it looks like their Fed hike, their rate hikes are what turned inflation, then that's a benefit for them.
So and that comes back to that portfolio effect again. Let me ask you this. Do you think open market operations mean that much anymore? Because I keep seeing, we're still looking at a relatively flat yield curve. Matter of fact, inverted at some points. If you go dollar, euro dollar, there's some euro dollar inversions there, which are real weird. And we won't get into the nuances of that. That's better left to Emil Kalinowski and Jeff Snyder. But as far as just two dudes, in the market, on our own, just kind of trading around this, when you look at a flat yield curve, when supposedly a vibrant economy would show something completely different, a very healthy upward sloping curve, you're seeing, I think the limits of what monetary policy can do. And I think if you boil it all down, monetary policy is almost all what you said, signaling and portfolio effect, and very little actual effect in the markets other than just the knee jerk of the common trader.
Yeah, I think monetary policy is mostly smoke and mirrors. And I do look at the yield curve and think that makes me think that inflation is not that big of a concern, and that the real concern is disinflation. But that viewpoint might be outdated. It's possible that that longer dated treasuries do not have the signaling value that they used to have. It might be that longer dated treasuries, the price is being set by price insensitive buyers due to banking regulations and foreign central banks keeping their currencies down, or collateral needs or whatever. I think I'm going to stick with my traditional view that they do have signaling value, but I think you could also make the argument that the yield curve has lost its relevance because the markets are not being driven by price sensitive buyers.
You think it's ADD, like financial ADD? We're shorter term thinkers, and the 20 and the 30 just don't make a lot. Those tenors are not super important to people trading now because it's almost like the world changes so fast and with such kind of violent motions that I don't even care what 20 and 30 year looks like to me. I'm like 10 years is as far as my vision goes. I mean, I wonder if we just have like net financial ADD.
I mean, I think the traders do. I would say equity traders do. I think the bond market, I think, does not have ADD. The bond market takes a genuine longer term view on things, but that's what makes it valuable. Like I think you can take signals out of the bond market and make conclusions from what's happening in the economy now, what's going to happen in the economy. So I would say that the equities tend to be more ADD, and probably increasingly so. Russell Clark, I don't know if you're familiar with him. He has an interesting thesis on markets losing their predictive value and their signaling value for various reasons, and I think that might be the case. It might be, my approach from trading was always to like look at what's happening in the market and then draw conclusions from that, rather than the other way around, rather than look at what's happening and then say, oh, the market's got it wrong. I always assume that the market's right, and then I just try to understand what it's telling me. But it may be the case that is less so than it used to be. It may be that markets are, for various structural reasons, are just not as predictive as they used to be.
Well, I guess there could be an argument that in these newer spaces like crypto and things like this, these new markets and new technologies, information is not equally distributed and equally available. So kind of that information hypothesis doesn't quite hold true here. And then as the market becomes more mature, there's more mature participants that come into the space, more currency units, and more liquidity, you start to see that kind of that more symmetrical spread of information and less of, again, like you said, the 100Xs and 1000Xs, because of the availability of that information is more widespread. I don't know. I guess we could go a bunch of different ways on that, but let me ask you this. So there was is there anything in the market, in the tokens, that you thought was specifically interesting? Because I have two kind of interesting two articles that I found that I thought I'd love to get your comments on. But before we leave the markets, was there anything in general other than just this kind of sigh of relief that you've been noticing over the last couple of weeks?
Not really. I would say the one thing I think is interesting is just randomly something that I've been looking at is the Osmo token, which I see Adam is on your list there, and
Yep.
The Osmo token I think is really interesting because, as far as I'm aware, it's the only highly inflationary token that has not gotten wrecked. So I'm interested to see how that works out. That is either, like we're talking about predictive markets, that is either a signal that something is going really right with the Cosmos ecosystem, or it's a signal that, crypto markets are inefficient and it's just, going to get wrecked later on. I tend to think it's the former. I think that, something is going right in the Cosmos ecosystem, and that's creating enough demand to keep even an inflationary token like Osmo up. But that'll be TBD.
I'm a big fan, big proponent of Cosmos, and I have been. And I was actually a little bit taken aback when Grayscale didn't choose to include them in their smart contract fund, the one they launched last week. But yet Stellar was there. I thought that's very weird to me.
I'd be interested to know. I'd be interested to know what their process was in deciding that.
I feel like there may be some politicking from the fund, but who knows? We'll see. Grayscale's got their own bag of problems they've got to deal with. So let's talk about it. There was a couple of articles that I thought were really interesting. One was this U.S. e-cash bill proposed, digital currency that replicates cash, bypasses the Fed. So U.S. House bill proposed a Treasury-issued, hardware-secured, and anonymous form of digital cash. Well, we know anything the government does will not be anonymous to them. The Electronic Currency and Secure Hardware Act, eCash Act, introduced today. Today is not today. Today was last week. In the United States House of Representatives could herald a new direction in government-sponsored digital currencies. Legislation calls for the U.S. Treasury to develop and pilot an electronic version of the U.S. dollar. It's easy to use for marginalized or the technologically challenged. It would also maximize consumer protection, data privacy, according to its principal sponsors. Stephen Lynch, chair of the FinTech Task Force in the House Financial Services Committee. Interestingly, it's eCash, as it's called, would be issued by the Treasury Department, not the Federal Reserve Board, which would mean it would technically not be a central bank digital currency, CBDC. The Fed's not a central bank anyway, nor would it be built on a blockchain or require internet to operate, which then you go, well, wait a minute, this is not crypto.
You wouldn't require the internet to operate? How?
I guess well, there is some technology that will allow you to basically tap phones. Cardano right now is actually working on something that farmers could use when they don't have internet access to transfer currency units. For instance, you could imagine some places in sub-Saharan Africa where the internet is dodgy, and you might need to buy some grain or something like that from a local distributor, and no one has the internet, but there's enough of an account.
How do you avoid double spend if there's no internet?
So what happens is when they allocate those funds can't be double spent because they're unspent until both of the nodes push those transactions. So think of it as a layer 3 that would then push back to kind of a layer 2 that would then reconcile to a layer 1. So you would have a layer 2 that would batch transactions, sharding, and a variety of other things, whether it's optimism and snarks and all this. And then you would have a layer 3, which is essentially off internet transactions that could then batch to the layer 2, if that kind of makes sense.
Yep.
So, which will be really cool. And Cardano is one of the only ones working on a physical solution like that. But I guess that's what they're saying here, where, Grandma and Joe Sixpack could go slap phones, transfer some currency units, and as long as there's some idea of an internet at some point to reconcile, that you would be okay. I guess it could be like essentially a handshake Wi-Fi transaction or something, and what they do is they actually pass a portion of the physical of your private keys are passed to the other phone in some kind of obfuscated way to validate and to prevent that double spend situation. It's pretty interesting. But essentially it's electronic physical cash. Which
electronic, that sounds a little oxymoronic. It's like jumbo shrimp or something.
Yeah, they're jumbo shrimp. I can't see them. Well, they're jumbo compared to, say, neutrinos. So the initiative isn't meant to preclude a Fed-issued CBDC, however. So this would run ancillary to. So the pilot program launched by eCash Act will complement and advance ongoing efforts undertaken by the Federal Reserve and President Biden to examine potential design and deployment options for a digital dollar. So it seems like this is kind of a test, like, would this work type of a thing. My gut feeling is this would work as a layer 2, 3-ish. This would not work as its own, off internet cash supply that's not cash, because we have that. It's cash.
Yeah, that's interesting. I'm gonna have to think that one through. But I love this kind of stuff. I love that we're innovating money. I think I think there's lots of super interesting stuff happening in stable coins, and my prior is that the interesting innovation is always going to happen in private markets. But if the government wants to get involved too, then I'm all for it. Like, see what they can come up with. And I think if they, the concern is that they over club it and make, everything totally trackable and stuff. But I think that would just accelerate the transition to crypto. That would make, people would, put more value on permissionless crypto. And I think even that outcome, which seems like it would be the worst possible outcome, would turn into a positive for crypto.
Yeah, that'd be a pretty big onboarding event, wouldn't it? Their final statement was, and I quote, I have to almost get like a deep Southern accent to kind of really, sound it. Instantaneous final direct peer-to-peer offline transactions using secure hardware devices that do not involve nor require subsequent or final settlement on or via a common or distributed ledger or any additional approval or validation. So It seems like they want crypto that's not crypto at all. This will be interesting. We will see how this plays out. Okay, the other thing I wanted to talk about, which is kind of cool and kind of interesting and kind of scary, and I'm betting that there's a piece in here for you somewhere. And that is Coinbase begins tracking off-platform transactions and transfers for some users. Essentially, Coinbase, the off-platform usages mean Coinbase says additional information that requires a mandatory collection will be gathered from all of its users based in Canada, Singapore, and Japan. And I'm sure, once this starts, the list expands pretty quickly. Coinbase cites compliance with local jurisdictions as the primary factor driving this new requirement, which does not apply yet to other Coinbase users across the globe. Gut feelings on this one.
So wait, so what does what does off-platform mean? Does that mean they're going to track your other wallets? Like if you make a transaction from Coinbase,
they want the recipient wallet information, name, address, and credentializing information so they can validate who your currency went to.
Wow. And they won't let you make the transaction otherwise?
That's right. If it's to Japan, Canada, or Singapore, in those jurisdictions, then they say they're just complying, but again, I know it's not so easy for Coinbase. They're in the middle now trying to say, like, what can we do? What can't we do? What coins can we list? What's the security? No one will tell us. And so I know that this is it's sticky. I'm not actually blaming Coinbase, but man, when these kind of financial tools are implemented, they don't sunset. They get bigger and bigger. My gut feeling is, according to Coinbase, the policy will be implemented starting in April of this year. So, like 3 days from now, with users from Canada, Singapore, and Japan facing the requirements. In detail, users based in Singapore and Japan are required to share additional recipient information for all off-platform transactions, meaning if it leaves Coinbase, they have to supply all the information. The case is different with users from Canada, where users sending less than 1,000 Canadian dollars are exempt from the rule. Over 1,000, they have to comply. If they go above this specific amount, users in Canada will be required to share the full name and residential address of the recipient, which you may not know, by the way. Like if you're buying a product with crypto.
Right. So basically, you just need to set up an intermediary wallet. So yeah, just go from send it from Coinbase to your own MetaMask, and then from there you're on your own, I assume. But I think the takeaway here is that crypto is just still highly dependent on fiat on and off ramps, and it's also a reminder that the real way to do crypto is to be to like run a node or something, or do something that earns you crypto natively, and so that you have some crypto that was never at any point fiat. That would be the real and ideal way to do crypto if you can.
Staking is the new investing. I mean, I probably, most of my monthly liquidity. Now, again, I don't leave crypto and come back to dollar units because to me that doesn't make sense. But I have spun up some dollar denominated loans against my crypto, and especially against crypto that I earn staking. And so my staking cash flow is great. And so essentially I have a little pile of money that didn't exist ever in the form of cash that now exists in the form of cryptocurrency units. Mm-hmm. So I think you're spot on there. But does this create, I don't know, even when I was listening to you talk for a second, I wonder if this creates a funnel in your mind where you go, okay, first I go from Coinbase to my own account at KuCoin. Then I go from KuCoin into a mixer, a legal mixer. Then I go from a mixer to a ring signature. Then I go to a snore signature. Then I spit it back out back to KuCoin again after I've, done the legal version.
That's too hard. Nobody's going to do. I mean, no, that's not. Yeah, that DeFi is not going mainstream if that's how many hoops you have to jump through.
Well, but for somebody that just decided to say, when I get my money out of the system, I want to wash it that first time. I just want to clean the dirt off of it.
Right. Yeah, maybe. Yeah. I guess that works for small amounts. I mean, one thing that we've learned is that the mixers and stuff don't work for large amounts. But I guess for like normal person amounts, I guess that would be sensible. Yeah, just send it through. Yeah.
just a chunk of, because, and I don't pull scams. I'm very fortunate that I don't have to pull scams, but on the other side of it, I don't think you should punish people for wanting their money to be their money and to be able to do with it what they please. If someone does a crime, go stop them doing a crime. Build a case, do what you're supposed to do, follow the kind of the wheels of justice. She's blind, I guess, whatever they say. But what I don't think you do is punish money itself, punish the behavior. So I don't have a problem when people say, I'd like a portion of my currency to be private. On the other hand, I tell people to stay away from privacy tokens because that's low-hanging regulator fruit, right? That's like the lowest hanging fruit, like drug dealers and conspirators and the terrorists use privacy tokens. And you could see Joe Sixpack going, yeah, man, I guess that's right. Down with privacy coins. What is your thought on, we'll round it out with that. Privacy in general in crypto. What are your thoughts there?
Yeah, I mean, I think that is, a huge use case for crypto. If you want to get really crazy, you can start thinking about, the Russian central bank and the China central bank, and they would like to have their assets in some kind of permissionless state so that the US can't just freeze them. And if you think about what the next reserve currency is going to be, like, everyone is always predicting the demise of the dollar. So what would the next reserve currency going to be? It's not going to be the euro, because the euro is a mess. It's not going to be China because their financial system is not developed enough to handle it. The obvious candidate is crypto, but it's, if the crypto is not permissionless, crypto right now is, Putin cannot put $400 billion through a mixer. That's not going to help him. So there is a large use case for a totally permissionless and private crypto, which I guess is not going to happen anytime soon. On a smaller scale, I don't know. I mean, if you're a citizen of a country, you do have to pay your taxes, right? So, and that's pretty much all they're asking you to do. Unless you get into like Canadian trucker stuff, if they start trying to manipulate behavior of private citizens like they have done with Russia, then that would be an incredible use case for crypto, right? Because then I think people would have a totally legitimate reason to be hiding their assets from the government.
Did it panic you a little bit? I mean, when they started saying, like, if you're Putin, we're freezing your stuff. Then it was, if you're an oligarch, we're freezing your stuff. Then it was, if you're Russian, you can't have access to, Visa or MasterCard. Sometimes these things, they start becoming so wide in scope and they don't ever seem to curtail that. So I guess, did it kind of put you on notice? Like, I deal with a lot of international clients. A lot of my investment clients are not here. They're in other places. And I got some panicked phone calls and they're like, wait, what just happened? Like, can they really say that your debt's not, there's no value to your debt? Like your treasuries don't count. And I said, yes. And they said, well, how can they do that? I'm like, well, I guess the most pristine AAA collateral, immutable debt in the planet is no longer so AAA anymore. And so they said, well, what does that mean for, I said, I don't know, but I would be a little bit worried because who they determine is the bad guy, well, that changes as the wind changes direction. And whoever's in power and in politics, every 4 years, the list of bad guys could demonstrably change. And pretty soon, everyone on earth is wondering, like, is my money good? Is my debt good? Are they going to cut off my credit cards because I went to a party at one time with a dude that lives in a country that, like, how far do you think this little turning people off, like cancel culture in finance, how far could that go, Byron?
I don't personally worry about it because, one, my assets are not big enough for anybody to bother freezing. So that's good, I guess. And the other thing is that I was already aware that, money in a bank is an IOU from the bank. That's not your money. You have an IOU with the bank. And if you own treasuries, you have an IOU from the government. That is, that's all that is. So I think that understanding has gotten more widespread. Like people have a better understanding of what they actually own, what their rights are to that. But I do share the concern on a theoretical level. Like I don't like the idea of the government manipulating behavior with financial sanctions. I think finance should stay finance and politics should stay politics, and it would be best for everybody if those two were as separate as possible.
Man, this thing, we could probably do a 17-hour show. But to I guess you've got an article to write. We'll go ahead and wrap it up. I hope that we can make this kind of a regular thing, because I urge everyone to go check out Byron's work. And again, where can they find you? I put it in the description, by the way, a link to your columns. But if you could just tell people as well, where can they find you if they want to kind of interact with you and kind of get inside your brain box?
I'm on Twitter. I respond to DM, so hit me up on Twitter. My email is on. Actually, no. I guess my email is not listed. I guess it's my Twitter account that's listed on the newsletter. But yeah, just go to the Blockworks website, click on the newsletter thing. You can either subscribe or you can see the archive there and hit me up.
Byron, you're awesome. Again, I love your stuff. I'm looking forward to. Have you already written the one that publishes today, or are you writing?
I've written today. I wrote today's. I finished today's this morning, more or less. So I've got to start writing tomorrow's. Interesting.
Okay, I'm excited. And let me know when you do the expose on Nick Black. I'm very interested to see how that one works out with your bosses.
I'm hoping for a book deal. So that's gonna be my next thing.
I'm going to do the unauthorized autobiography of Byron Gilliam. I think that's my next piece.
You write mine, I'll write yours. We'll see. Yours is definitely your autobiography will definitely be more of a thriller.
I don't know. People be throwing up half the time. Okay. Thank you so much for your time. Again, guys, please check him out. Please check his work out. There's very few places where you can get really good, consistent dialogue about not a asset or B asset, but just the space in general, and get a perspective of someone who's coming from the equity space with a lot of history in the equity space, coming over into crypto and engaging the same way all of us are in that constant kind of pursuit and fight for information. So I love your stuff. I think other people are going to get a lot out of it.
All right, great. Thank you, Nick.
Ladies and gentlemen, please stay in school. Don't do drugs. Don't do anything my poor insolvent, strung out on meth grandmother wouldn't do. And as you know, that is very little. We will see you on the next one.